Hello dear student, I am Dr. Vasant Boraste. Here I am going to share with you one practical example of accounting standard 14, that is accounting for amalgamation, where we will calculate how to calculate the purchase consideration. So let us start the practical example of AS14. Let us start the practical example of accounting standard 14, that is accounting for amalgamation. This is practical example number 2 or illustration number 2. A Limited takes over B Limited on 1st April 2019 and discharge consideration for the business as follows. First one is issued 50,000 fully paid equity shares of rupees 10 each at 10% premium to the equity shareholders of B Limited. Second, issued fully paid up equity shares of rupees 100 each to the preference shareholders of rupees 2 lakh to B Limited at a premium of 10%. And third one is calculate the value of purchase consideration as per AS14. So here the example is given and you can calculate the purchase consideration as per AS14, that is accounting for amalgamation. So let us start the solution. First of all, you have to make sure that issued 50,000 fully paid equity shares means 50,000 shares of rupees 10 each and premium rupees 10%. So 10% premium means 10 per share value is rupees 10. 10% of 10, that is 1. So per share value will be 11 after the premium, that is first one. Second one is issued fully paid up equity shares of rupees 100 is to the preference shareholders of B Limited. So the B Limited preference shareholder will get equity shares. The value of that preference shares of B Limited is rupees 2 lakh and the per share value is rupees 100 and it is given at 10% premium. So the per share value will be rupees 110. So let us start the solution. For that you have to calculate the amount of purchase consideration, that is discharge of purchase consideration. First one is 50,000 equity shares of rupees 10 each. Here is given 50,000 equity shares of rupees 10 each at a 10% premium. That means the value of per share will be 11. Total number of shares will be 50,000 and the value of per share will be 11. So 50,000 into 11, answer will be 5,50,000. And here you can see the second part or second consideration is issued fully paid up equity shares of rupees 100 each to the preference shareholder of B Limited rupees 2 lakh to B Limited at a premium of 10%. So equity shares to preference shares, that is 2 lakh, it is face value plus 10%, or you can calculate as 100 per share plus 10% of 100, that is per share value will be 110 and number of shares will be 2 lakh divided by 100, that is 2000. So 2000 will be number of equity shares into 110, that is value per share. So total value of shares will be 2 lakh 20,000 and the purchase consideration will be 7 lakh 70,000. So in this way you can calculate the purchase consideration as per accounting standard 14, and you have to mention that as per AS14 the value of purchase consideration will be 7 lakh 70,000. In this way you can calculate the purchase consideration as per AS14. So this is the example number 2 of accounting standards 14 as per, that is accounting for amalgamation. Now we will start our third example as per accounting standard 14, that is accounting for amalgamation. So let us start practical example number 3. This is accounting standard 14 practical example number 3 of accounting for amalgamation. So SAM Limited take over Batman Limited on 1st April 19 as per AS14. Accounting for amalgamation is to be done on the same day and the discharge consideration for the business is as follows. First one is issued 10,000 fully paid equity shares of rupees 100 each at par to the equity shareholder of Batman Limited. So the first consideration is equity share. Second one is issued fully paid 12% 5,000 preference shares of rupees 100 each to discharge the preference shareholder of Batman Limited with 10% premium. So the second consideration is preference shares of 12%, that is 5,000 preference shareholder which is at 10% premium. So the calculations are very simple. 10,000 equity shares into 100, the answer will be 10 lakh, and the issue fully paid preference shares, that is 5,000 preference shares of rupees 100 each plus 10% premium, so that is 100 plus 10, that is 110. So 5,000 into 110, you can calculate the amount to be paid to the preference shareholders of Batman Limited by the SAM Limited. So you have been asked that calculate the value of purchase consideration as per AS14. So let us start the solution. Here you can see as per AS14 accounting for amalgamation, that is calculation of PC. Calculation of PC as per AS14. Calculation of the amount of purchase consideration. Here is the details are given. Discharge of purchase consideration, we have to calculate the number of shares, value per shares, and total value of shares. First of all, you have to see the problem where it is clearly mentioned that 10,000 fully paid equity shares of rupees 100 each at par. At par means the value which is mentioned on the face of the share, that is face value, that is 100. So 10,000 equity shares are there. So number of shares will be 10,000 and the value of per share will be 100. In this way, you can calculate the value of shares for equity shareholders. So that is 10 lakh. Second one is 12% preference share capital, that is 5,000 shares at rupees 100 each plus 10% premium. Here is given 5,000 preference shares of rupees 100 each plus 10% premium, that is 12% preference shareholder. So the number of shares will be 5,000 and the value of per share is rupees 100, but the shares are given at 10% premium, that means 100 plus 10, that is 110. So the value of preference shareholders will be 5,50,000. In this way you can calculate the purchase consideration. Here you can see the purchase consideration is 15,50,000. So you have to mention it at the bottom that as per AS14, that is accounting standard 14, which is known as accounting for amalgamation, the value of purchase consideration will be 15,50,000. In this way you can calculate the purchase consideration as per AS14. Thank you very much. In the next example we will see the assets and liabilities when it is taken over by a new company, then how we can calculate the purchase consideration. Thank you.